Good morning, everybody. My name is Huw Williams, and I work for the European Bank for Reconstruction and Development, EBRD. I'm in their equity team in London, working with our natural resources team. Before that, I was in private equity with Actis in emerging markets, mostly Africa. I've been asked to talk today about whether EBRD will be able to fund new projects in the next 6 to 12 months, and if so, what will be our funding and lending criteria. Sorry, I'm having a small technical. Okay, so we'll start off with the response on COVID, and then for those who don't know us, a bit about EBRD and especially our natural resources team. So EBRD's response to COVID is that we are a multinational international financial institution, and this is an opportunity for us to step up and do more whilst perhaps the commercial banks and commercial investors are scaling back. So we first announced a COVID solidarity package on the 13th of March, and that's primarily for our existing clients who may perhaps want extra liquidity in case they have a shortfall, or who are looking to take precautionary debt down. Moving on from that, we started with 1 billion, and that's already been scaled up to 4 billion. And we're now starting other frameworks, which include local currency and capital markets and equity and structured equity. So the message today is we are very firmly open for business. We are able to finance new projects, and we're looking at both debt and equity. So the challenge is not, from our perspective, any lack of finance. The question is, how do you actually do deals in a COVID environment? So we've all been working remotely for the last 2 months, and we're all getting quite used to these Zoom calls, but it's difficult to do the marketing and the networking and the due diligence remotely. So as an example, we have 2 live deals in the mining sector we're working on at the moment that I'm aware of. The first, we had done due diligence before COVID, so the negotiation phase is relatively straightforward remotely. But we have another deal at an earlier stage where we've not been able to do a site visit due to lockdowns and government travel restrictions. So in that particular case, technical DD has been largely based on the NI 43101, plus using things like GoPro to get staff who are on site to send us video of the operations. A second issue for us around providing certainly equity is it's difficult to model what the projections look like these days. Clearly, there's been a lot of demand destruction in the short term, but nobody seems too sure whether there's going to be additional phases of COVID, whether we should expect another lockdown in a few months. And if there is a recovery from COVID, is it slow? Is it U-shaped? Is it W-shaped or V-shaped? So there's all of this uncertainty around what does the future look like and how do you model that. In addition to the longer term impact of COVID, then there's obviously the short term problem that perhaps the mine site is unable to operate, or it has contractors who are unable to get there to install something, or it's relying on customers who themselves are shut down and unable to operate. So all these reasons give you a high degree of uncertainty on any sort of projections. There's also a problem for equity deals that valuations have been falling, especially at the end of Q1, and companies are always reluctant to accept that they're not worth what they thought they were 6 months ago. So when valuations are declining, it's often harder to reach an agreement on the valuation. And so we may need to look at structures such as ratchets or providing mezzanine debt to bridge that gap. So those are some of the practical issues. But on the plus side, in some of our countries, it seems to be that countries are starting to come out the other end of COVID. And in some countries that people are talking about going back to the office, going back to work. And we have local offices in every country we invest in. So that gives us much greater flexibility around site visits or meeting with management teams or meeting with the sponsors. For those who don't know EBRD, we were established in 1991 when the Berlin Wall came down, and we are owned by 69 governments, and we invest in 38 countries. It's often seen as an EU institution, but the EU countries only have a majority. We're not 100% EU. Every country we invest in is a shareholder, and there are also significant other ones such as Japan, USA, China, India. And our region initially was former Soviet Union, Eastern Europe. And over time, we've been asked to invest in other countries. So you can see in the middle, we started doing Egypt, Jordan, Morocco, Lebanon. And so now it's mostly sort of Eastern Europe, Central Europe, down through the Balkans into Greece, Turkey, and then some of the Mediterranean region. This is what the countries we invest in looks like, although we're not currently seeking new investments in Russia, which is obviously a big hole in that map. Typically, we invest around 10 billion euros every year, and you can see the countries we're investing in are places like Egypt, Ukraine, Turkey, and about 80% of what we do is in the private sector, and that's mostly debt. Our equity team is a relatively small part of the business. So in terms of what we can offer to people, we do debt and equity. The debt deal size will go as low as 1 million, but is typically around 10 to 20 million. For equity, we don't go below 5 million, and we generally don't want to own more than 10% of a company. So we're looking at $50 million plus market cap businesses, which tends to rule out many of the explorers. What we can do is, reasonably long tenors, especially on the debt side. And in some countries, we can offer local currencies as well as euros and dollars. We only finance 35% of the project on the debt side, so we will need to work with other lenders. In terms of the mining sector, we don't do uranium, we don't do thermal coal, and we no longer do oil. We are still investing in gas, and we will do metallurgical coal. The project has to be located in one of our countries, although often there are obviously international holding companies that may be outside the region. So we may be investing through a Cyprus holding company into an asset that's in Kazakhstan or Romania or Bulgaria. So moving on to the natural resources team specifically, it's a smallish part of the EBRD business. You can see around $1 billion a year out of that 10 billion we talked about earlier, and mostly debt. So our equity portfolio is relatively small. There are 30 plus bankers based in various countries where we operate. London is obviously our head office. And you can see we have a diverse portfolio in terms of the geographies. These are some of the clients we've worked with in the past. And this is another reminder that we take minority stakes or do a third of the project finance for debt projects. If you want to get in touch, these are some of the people who are happy to talk to you. And that concludes my talk today. I've added a few slides at the end to show some of the deals we've done that you're welcome to look at after this presentation. So as an example, last year I think we did a convertible loan with Erdene in Mongolia to help fund their bankable feasibility study. And we also took part in the bonds for KGHM in Poland, as well as a ferronickel complex in Kosovo. So you can see quite diverse, sector agnostic in terms of metals, and able to operate in all the countries we showed you on the map. Thank you very much.